Ha, hello. Right then. Okay, can remove all these drawings. I've had a go before doing this, so I suppose you might say I've had a little run through just now, and but unfortunately the thing wouldn't work. Okay, so starting out, if in doubt, scan out. There we go. So what we got over here? We got some sort of a mad trend down there. Let's have a look. See what's going on. What is going on? What is going on? Get those highs in. Get those key areas in. And there. Probably need to let's put those in. Significant areas for the future. So I hadn't looked at this probably since early 2022. There were some pretty reasonable scalps or swings to be had in these back then. So what we're doing, just taking the tops and just taking across the tops there and seeing what's what. Okay. Um, there, there. So those are in the significant areas identified for the future where they might pop up. To there. Where is their convergence and all that sort of thing. Okay, 382. So it's just trying to break up through there, isn't it? Or is it? Okay, so a significant area there, 67.38. That's it. So that's okay. So yeah, sure. I better probably explain. So basically, on TradingView, you can access TradingView for free with a credit card, and they will provide. I think it was three different um, that you're allowed to use at the same time on the chart. Three different indicators there. The ones I use the most are the relative strength index, the triple exponential moving average, and the moving average. I've got those, moving average set in the 50, 100, 200 day, the triple EMA, was it 10, 21, and 55? Yeah, 10, 20, 55, which are pretty common throughout the industry. Um, and so other people are using these things as well. A lot of other people are using those same levels. That's something to look up. You can look those up on a really good source of information is Investopedia. So anything to do with trading, investing, etc., the markets. If there's a question about that title, simply say triple moving average Investopedia in the Google. Just input that. Any question at all. Interest rates. Put them in. Bonds. Invert bonds yield curve with the with Investopedia and put it in. Really useful to have. So here we are in the 5 day chart. So why trading view is widely used is very widely used. And unless a person is doing I can't remember how much it is a year. Is it 20, 50? I don't know. Is it a six-figure sum per year for a Bloomberg terminal? I think generally people do tend to use Trading View for their charts, and the charts are just a representation of how someone described it as how rich folks, the mood of rich folks, how are rich folks feeling. Well, that's one way of putting it. It's just a pictorial description of mass psychology, which influences price action on the market. Simple as that. and there is lots of and these candles have been around for hundreds of years and were used by Japanese rice traders to represent changes in price of rice at their rice markets. So it's been used for commodity trading for centuries, and is well known. And within that, you can get different types of patterns, and it's well studied. Different types of patterns and behaviours, and the instruments, the indicators. So the indicators, which here have been generally well researched and reflect hundreds of years of price action. So there's lots to learn and lots to get on with. Some of it, after a bit, is like learning a language, and that's how I got into it. A mate said when I was interested in getting into this, it was because I could see there was going to be inflation and price increase, cost of living increases back in 2020. That's going to happen, and sure enough, it did. And I wanted to get more bang for my savings. And he said ETFs and mutual funds. I googled that, and I saw these charts kept coming up, and I thought, well, I can't read that. I'm going to need to learn to read it, and have discovered, and about that sort of happy little accident, I've discovered all these different things and new opportunities, which I actually quite enjoy. Um, so this is looking at charts. My decision making based mostly on charts would be called technical trading. I like the technical stuff. Also, studied the macro stuff. A macro is in big, wide things that last for years rather than minutes, hours, days, weeks. You talk about months and years and even decades. Okay, and that would be that. And then, of course, there is ideas of fundamental research, looking into the fundamentals, the nitty gritty of perhaps an individual equity or sort of company, really. So there we go. Just popping from the across the highs there, putting a trend line down, lock that in. So getting that across the high there, and then I'm going to work our way back down to see what's up. And then just, if in doubt, remember, if in doubt, scan out. Get the big picture first, and then start zooming in. So what has happened down here since probably it was that 2022, early 2022, yeah. And it's just been sideways for a bit and has from broken out upwards from that 2022 high. I just try and work out there. So I took that there. So basically, I was looking at, you see, just under here on there. So that's where I was looking at there. That little, it's come down, there's a little spike up. So that's where I looked at there. It seemed a sort of significant level, and it kind of cuts through the swathe of that evenly. And sure as eggs is eggs, comes down more or less to that point. So what I'll do is I'll take that box and adjust the box to the lower there, bottom of that candle. There. So it's sort of trying to thrash out what's happened is it's burst up. So the question was, why is it done what it's done? Why have some of these things done what they've done? Well, it's burst upwards and outwards of this long sort of trend of lower highs that goes back a very, very, very long way. Ignoring, when was that? 2010, So from, let's just take this from that May 15th. Yeah, it has been since, toxic acid bubble. Oh, what was it? .com bubble and all that stuff. It's been getting lower highs, hasn't it? Lower and lower highs. And it's trying to establish a new level of support. So it's been lateral for a few years, hasn't it? So it's broken down from that 2015 high down to February 2023 high there. It's broken up through the levels. It's got past the 2022 high and is testing the 2020 high, the December 2019 high possibly. He's trying to challenge that. Long wick up. Generally, really sort of looking at this level there, haven't we? It's not quite come up to it yet, and it will be challenging that, I suspect. If it can hold the support of the price at 52, 53 level, yeah. And it's come back down in there. So getting out that 5 day down to the 3, you can see that there. Okay. Why has it done that? Why has it done that? Fairly even on the RSI, the relative strength index. It's not really getting any higher. Fairly continuous at 77 in the 3 day. Do look in the daily. Okay, so this changes it in the daily. Back there, reached that local high finally April, between March and April. It's been overheated a while in there. Overheated in there. That section there. And then the RSI starts getting lower highs, losing strength. And we did eventually get a pullback there, which I thought would have been it. So we've got a bearish divergence. So the highs are getting higher, and in the meantime, the RSI is getting nice from that high there. Look at that there. See the difference in the high levels? That high there, we've got the peak of the RSI. Peak of the RSI there. Higher there. Even higher and even lower RSI. And eventually has properly have a decent capitulation and pullback. About a good 15%. Wow. And it's continued up. We've got this push up even higher on the daily. Perhaps there, that sort of fingering up there. How did that look in a lower time frame? Peacock failing to regain those highs, wasn't it? So we got there. See those highs across the tops there. Burst up, and again in the lower time frame. Let's have a look. Slight bearish divergence. So we got that peak there. Where is it? There. Down. And then it's burst up even higher, isn't it? It's gone higher. In the meantime, RSI, fucking cunt. RSI has gone lower. Let's have a look there. Local stuff. Now then, perhaps signs showing there, trying to force its way down, balls fought back. So there's a little precursor perhaps with that. Well, that could have been, it's perhaps precursor, not definitive on that hammer. But let's have a look. It seems on the hourly. Working down again. It came up, retested, refound, failed, decreasing RSI strength, failing to reclaim those highs, and eventually did quite strongly capitulate. Was there any news in that? So let's just take that there. This might come down to the 1272 thereabouts. Excellent trade through there, and probably almost definitely get a short in. We've got the crossover there, well distance, almost overextended from the moving average, the inverted moving averages, failing to, not even a sign of a rally at that point. Excellent opportunity there. Easy point. Put stop loss on some recent highs. Bang it in there. Okay. And so we've got a natural target with that price action there and just letting it run. So it's probably about 10% overall. There we go. Fantastic. Now that would have been wonderful to get in on, wouldn't it? Last Friday. Fantastic. Wow. So yeah, you've definitely got a correction going on. Why is there a correction? Back to the 5-day. Let's put on some moving averages in there. Oh, actually, probably need to get rid of some of these drawings. There we go. Get rid of that one and all. Okay, flick it up to the hourly. There may be. And so there. So yeah, that's spikes up higher, comes down, just slightly reclaims that, tries to reclaim that very local trend through there, fails to do it, retests up, and rejects, comes down. Definite point in there. Easy point in there. Again, probably slightly adjusted, and an obvious place there. Use a Fibonacci retracement tool. That's what I like to do. Use a Fibonacci retracement. I'm not telling anyone to do anything because I'm not properly trained in this. It's just something that I've picked up looking at patterns of behaviour on the markets over past few. And there we go. Potential targets in there. There is confluence with the box, which is already established based on sort of precise lows, all that sort of stuff. Going to take a while from there, perhaps. If you wanted to scale it down, probably going to be looking at touches on the trend line as well. So price quite often retreats to touches on previous touch levels on the trend line. So as it goes up, so it might just pop up there, pop up there, pop up there. Perhaps price level you can take when price does cut back is to look at previous prices. That's another thing that does work. But essentially, yeah, you got well overcooked, Established areas of potential support in here in the box might well be opportunities for buying in. If it drops below that level in the box, let's say 52.70, drops below that 52 level, 52 pence, then get the hell out of Dodge, sell up, get those stop losses in there, identify where the low points are, where there, if there is loss of support, it's just silly. Identify what the reversals potentially are as well, and where those buying in points are, and where on the upward journey, where potential areas of resistance might be, and those are usually where there has been highs and lows in areas of confluence as well, of volume and um, uh, areas of volume, etc. So straight away we've got a peak volume in the 55 area, which is again confluent with that box there, and there we go. So probably maybe take it out to the daily. Daily chart, a lot of volume in there. So, got that 43 as well. Oh my gosh. No, nothing there really. So, yeah, okay, interesting. 3 days. Yeah. So, let's take that VWAP off. So yeah, presently undergoing a correction, unless it's complete and utter capitulation, which would be then, if it does, it might just come around, find a level, a significant level to retest, usually retests on a breakout, comes back down to the previous big trend or thereabouts, and pops up back up. For the retest, it has to move away. It can sort of fizzle under, can move under before up. Yeah, all in all, we might be getting a retest on this 53 to 55 level. We'll see how it goes on there. Just establishing a nice area of support within that 50, 52 to, where's the eyes on that fucker there? Between there and there. It's about there, isn't it? Between 52 and about 62. So perhaps there's a 10 pence area where we're getting this phase of consolidation, hopefully before for people investing in Lloyds, before moving to the upside. Things can come down, and it's identifying places where they can come down to, and what happens, why are they coming down. In this case, it could be a retest, and where is that retest level? So we got those previous. Don't forget, we've got them previous highs there in these areas here. That top yellow box represents that area of support, so it could move onwards and upwards. Right, that's enough for me.